Hi there, welcome to this Screencastify podcast. What we're going to be looking at today is purchases and purchase returns. And we're also going to touch on two other ledgers that business use. One's called the general ledger and the other one's called the purchases ledger. So we'll cover those during the course of the next 7 or 8 minutes. First of all, be really careful when we're looking at purchase account and the ledger. Make sure that we only put in their goods that the business has purchased with the intention of reselling. So what we don't put in there are things like non-current assets the business purchases, like a car, buildings, maybe some machinery. They go as a debit entry in the actual asset account. Okay, purchase themselves are a debit entry. That's because we're gaining an inventory, which is a current asset. It's a current asset because we would intend to sell the asset within 12 months. Make a purchase either by cash with a cheque, and therefore it goes through the bank T account, or on credit, in which case we'd need to do something with a customer's account. Again, be a little bit careful when we hear the term credit purchases. What some students do is they start to credit the purchase account. In this sense, what the term credit means is that the goods have been purchased, but the money's yet to exchange hands. So you sold the goods to somebody or bought goods from somebody, and that person is either going to pay you or you're going to pay them at a later point, maybe, for example, at the end of the month. People we buy goods from are called suppliers. However, people we buy goods from on credit, the term we use for those types of suppliers is trade payables, and that's a new term. The old term used to be called creditors. They're called trade payables. They're a current liability because we're going to have to pay them within a year, and therefore we would expect to credit that account when we purchase some goods. So let's have a quick look at an example. This example here is BASF is a supplier. The supplier is supplying us with $8,000 worth of goods, and we're not going to pay them straight away, we're going to pay them at a later date. So first of all, we record the purchase. That goes in as a debit entry, so we put the date in, put the note, which is the opposite account. In this case, it's BASF. Put the amount in, which is $8,000. And that's the first entry complete. And then the second entry, which has got to be a credit entry, is going to go to BASF's account. It's a credit entry because we owe BASF some money. Put the date in again. In the correct column, put the note. And then finally put the $8,000, which we are currently going to owe BASF. Okay. And just to emphasise a point really, very quickly we'll have a look at a transaction. In this case, a business is going to buy a delivery van from AA Autos on credit. So in this case, it's not the purchase account which we're going to debit. It's going to be the motor vehicles account. Put in the date. Put in the opposite account. Put in the amount. Okay, and then we're still going to credit AA Autos. We're going to credit them because we now owe them some money. Bought a motor vehicle. And it cost $14,000. Okay, what I would do once I finish just very quickly discussing the exercise I've done for you is pause the podcast, do the exercise on purchases, and then we'll have a look at purchases returns. So you've got 6 transactions. Okay, be careful. One of the transactions shouldn't go in the purchases T account. The other transactions should. Work through them. Remember to put 2 entries in for each transaction, and then when you've done that, the answers are provided. So what I'll do now is pause the podcast and work through the exercise. Right, purchase returns. Okay, got an exercise again attached to this one. That's when goods are returned to our suppliers. So they're often called returns outwards. They're a credit entry because we're losing goods. You could also think about it as though as being it's the opposite of a purchase, and therefore it goes on the credit side. Accounts or ledgers. Okay, first of all, the supplier's account will go into what's called the purchaser's ledger. Okay, so okay, and as we said about the sales ledger, the purchase ledger would be a file or maybe a book, and that would just contain literally supplier's accounts. So there'd be a BASF account if you bought goods from a man called Tom Smith. There'd be a Tom Smith account kept in there, and you will find that where we've got computerized accounts, they still have a purchaser's ledger and a sales ledger. There's one final type of ledger, and that ledger is called the general ledger, and that contains all of the other accounts. So it also contains a purchase account, a purchaser's returns account. It will contain all the accounts for all the non-current assets. It will also contain the sales account itself and the sales returns account. So it's all of the accounts except for suppliers and customers' accounts. Right, we're going to look at a purchase return, and in this case, Mr. BASF was sending him back some goods, and those goods are worth $1,000. So we're going to need to put a credit entry in the purchaser's returns account. Date of the transaction was the 9th of October. BASF is going to be the other account that's affected. And it's going to be affected to the tune of $1,000. Credit entry, it's a credit entry because we are losing goods. The opposite entry, the debit entry, is going to go into BASF's account. It's going to go into BASF's account because we've sent him back some goods that we don't want. We also aren't going to pay him for those goods, and therefore he's going to become less of a liability, so we're reducing a credit entry, so it's got to be a debit. And it was for $1,000 US. There we go. Okay, that's what you need to know about purchase returns. I've done you an exercise where you've got a couple there to enter the accounts, and what you can then do is check that against the actual answers for the exercise. Any questions, obviously, if I'm teaching you, see me, ask me the question, and I'll go over it with you. Otherwise, thank you very much for your attention, and I hope you've learned something and you now feel more confident to do purchases and purchases returns.